Warren Buffett, often hailed as one of the greatest investors of all time, is a name that resonates across the business world. His fortune, which is well over $100 billion, didn't come from a few lucky breaks or overnight success. Instead, Buffett's wealth is the result of decades of disciplined investing, intelligent decision-making, and a deep understanding of financial markets. But how did Buffett build such an empire? In this video, we'll uncover the secrets behind Warren Buffett's rise to billionaire status, the strategies that turned him into a financial legend, and how can be applied to anyone looking to build wealth over time. The importance of long-term investing. One of Warren Buffett's core principles is long-term investing. He has always believed in buying stocks that he can hold forever, meaning his strategy focuses on finding companies with solid fundamentals and long-term growth potential. Buffett often references his strategy as buying businesses, not stocks, which means he's not just looking for quick returns from market fluctuations. Instead, he invests in companies with strong competitive advantages, experienced management teams, and proven track records. His best-known investments, like Coca-Cola, American Express, and Jayco, were purchased with the expectation that they would perform well not just in the short term, but for decades to come. By holding on to these investments for long periods, Buffett's wealth grew exponentially, with compounding returns on investments that were made many years ago. This long-term mindset has allowed him to avoid the common pitfalls of short-term speculation and focus on building wealth steadily over time. The power of compound interest. Compound interest is often referred to as the eighth wonder of the world, and Buffett has certainly made this principle work in his favor. The key to Buffett's fortune is his ability to generate compound returns from his investments. Buffett started investing when he was just a teenager, and since then, he has consistently reinvested the earnings from his investments, allowing his wealth to snowball. For example, when Buffett took control of Berkshire Hathaway, he began reinvesting profits back into the business rather than paying out large dividends. This compounded the value of the company over time, enabling him to expand his investments further and faster. The result? A snowball effect that has made him one of the wealthiest individuals in the world. Buffett's disciplined approach to reinvestment has allowed him to harness the power of compound interest, turning a relatively modest sum of money into billions. Focus on businesses, not speculation. One of Warren Buffett's distinguishing features is his aversion to speculation and market timing. Unlike many investors who focus on short-term fluctuations and market predictions, Buffett invests in solid, real businesses with tangible assets and predictable earnings. He's often said that he looks for companies with a durable competitive advantage, meaning businesses that have a strong market position and are unlikely to be overtaken easily by competitors. For example, his investment in Coca-Cola was based on the brand's dominant position in the soft drink market and its ability to generate steady cash flow. Buffett also avoids investing in businesses he doesn't understand, a principle known as staying within his circle of competence. Whether it's insurance companies, consumer goods, or banks, Buffett has always stuck to industries that he knows well, minimizing risk by avoiding areas that are too speculative or uncertain. The role of value investing. Buffett is perhaps best known for being a disciple of value investing, a strategy that was popularized by his mentor, Benjamin Graham. Value investing involves looking for stocks that are undervalued by the market, buying them at a discount, and holding on to them until the market recognizes their true value. The idea behind value investing is simple. If you buy a good company at a discount, the market will eventually correct itself, and the price of the stock will rise over time. By using this strategy, Buffett has been able to amass a fortune by purchasing companies at a fraction of their true worth. The power of patience. Patience is perhaps Buffett's most powerful secret to building wealth. Buffett famously says, "The stock market is a device for transferring money from the impatient to the patient." Unlike many investors who are eager to jump into the next hot stock or make quick profits, Buffett is willing to wait years, even decades, for his investments to pay off. He's been quoted saying that his favorite holding period is forever, which speaks to his belief that good investments don't need to be sold quickly. By taking a long-term approach and resisting the urge to sell when things got rocky, Buffett has allowed his investments to grow significantly over time. The importance of cash flow. Buffett has always been a big believer in the importance of cash flow when evaluating businesses. Unlike many investors who focus on speculative growth, Buffett prioritizes companies that generate strong and reliable cash flow. Cash flow is the lifeblood of any business, and it's what allows a company to pay down debt, reinvest in itself, and reward shareholders. He's also known for focusing on businesses that have high profit margins and can generate significant returns without requiring large amounts of capital investment. This emphasis on cash flow has helped Buffett make intelligent investments in companies that produce steady and predictable income over time. Avoiding debt. Warren Buffett is notoriously cautious when it comes to debt. While many investors and corporations use leverage to increase their returns, Buffett has always preferred to avoid taking on excessive debt. Buffett's cautious approach to debt is evident in the way he runs Berkshire Hathaway. Unlike many other companies, which are heavily leveraged, by avoiding debt, Buffett has also been able to maintain a large amount of flexibility in his investment decisions. When other companies or investors are struggling with debt payments during a financial crisis, Buffett can step in with his cash reserves and make opportunistic investments at attractive prices. The role of discipline and consistency. Another key to Warren Buffett's wealth-building success is his discipline and consistency. While many investors jump in and out of stocks based on trends or short-term forecasts, Buffett has remained steadfast in his approach to investing. He sticks to his principles and makes investment decisions based on solid research and analysis, not emotions or market noise. Buffett's consistency extends to his personal life as well. Despite his enormous wealth, he is famously frugal and lives in the same modest house, giving back. While Warren Buffett's fortune is vast, he has also made it clear that he plans to give away much of his wealth before he dies. In 2006, Buffett made an unprecedented commitment to give away 99% of his fortune to charity. He's already donated billions of dollars to organizations like the Bill and Melinda Gates Foundation, believing that wealth should be used to improve the world. Buffett's philanthropy is an important part of his legacy. By giving away the majority of his fortune, he's shown that the true value of wealth lies not in accumulation, but in how it can be used to better society. Warren Buffett's journey to building his immense fortune is a story of patience, discipline, and intelligence. Through long-term investments, value-focused strategies, and a deep understanding of financial markets, Buffett has amassed a wealth that few could ever imagine. But beyond the dollars and cents, Buffett's approach to life and investing offers valuable lessons for anyone looking to build wealth over time. So whether you're just starting out in your financial journey or already well on your way, remember, the Buffett method isn't about quick wins. It's about making smart decisions and sticking to them. If you found this video insightful, don't forget to like, subscribe, and hit the bell for more in-depth financial wisdom straight from the world's wealthiest minds.